Hello and welcome to the second portion of the online training tutorial. And once again, my name is Dan Steinhaus. So at this section in the training tutorial, we're going to be learning about the rate book, getting familiar with it. Please have at hand a copy of the Child Rider application and also the Final Expense application. We're going to be cross-referencing both at the same time, but our main focus in this section is going to be the rate book. So get your rate book out and you'll notice that there are some phone numbers on the front cover. You are going to be using these quite often. Alright, the first one is the main phone number. It's a live operator and they'll direct you to whatever department you need to go to. The after hours underwriting number, this is a cell phone that they give an experienced underwriter in the home office. It is a 24-hour number. Do not call it at 4 o'clock in the morning just to see if someone's going to pick up. So when you talk to these individuals, they will not be in front of a computer. You'll call this number only after the home office is closed, or after hours, obviously, or on a Sunday or maybe a holiday when you can't get through and you need a question that pertains to something in the underwriting category there. So if you have a question about a medication, you're not sure about it when you're with a client and the home office is not open, you may call this number. If they don't answer, leave a message and that person will call you back. Sometimes they might be out shopping with their kids or whatever. It's just a cell phone they keep in their pocket and they're assigned for the day. So the service and claims call center, your clients will be using that the most. After hour claims, the in-house verification. You'll be using this every time you're in a house with a client. And what that in-house verification does is after you've quoted the client and they've committed to a certain coverage amount, you're going to call in to the home office and the underwriter will talk to you, and then you're going to verify the address, social security number. You're going to give the home office all that information. Then you'll give the phone to the client. The client will verify it again, and they're going to go through all the health questions with the client again, even though you went through them already. And they're also going to do a prescription background check, and they do a little disclosure to see if it's okay for them to do a prescription background check. And this is your second line of defense to make sure that the policy is issued as applied for. And if there is something, it's second line of defense, so they may catch that the client forgot they're taking a blood thinner, and now while you're in the house you can explain to them why they're not a final expense policy and why they're modified and why their rate is different. Okay, the Spanish number is on here as well. These are not it's not designed to have someone translate for you or make the sale for you. This is for the Spanish agents and Spanish clients, and there's also a Spanish in-house verification number as well. Okay, that's on the front cover. And you'll also notice that there's one phone number not on there. That is the credit card verification number. So if a client gives you a credit or debit card, you'll need to call this number. It's 24 hours and it's an automated system. You just type in all the numbers that are on the card on your keypad, and they'll give you a sequence number, which is like a code that you'll write down on the authorization for payment form and also on the top of the application. So you'll want to turn to page 2 in your rate book, and we're just going to walk through the different plans that we offer with the Funeral Advantage program. So the main one, your bread and butter, this is going to be your final expense, okay? And you will write this the most. 0 to 80, we can get up to $35,000 of whole life insurance. This is going to be at your highest contract percentage. Whoops. 0 to 80 will be at your highest contract percentage. If they're 81 to 85 years old, that is a smaller percentage of commission, but you're still able to get them coverage, which is amazing, up to $15,000. Now you can also cover them for as low as $15 per month. That's per households. I once had a client, a husband and wife couple, pay $7.50 each. They each had $1,000 of insurance, and one paid $750 and the other paid $750. That is as low as we can go per household. which is incredible. So the policy is paid until the client reaches the age of 100, and when they reach that point, then if they have a $10,000 policy, we're going to give them a check for $10,000. So they must, in order to qualify for final expense, this is where you're going to pull out your final expense application. Okay, and for them to qualify for final expense, these are our plans right here, the plan type. Okay, they must answer, they can answer yes or no to the tobacco question. They would have to answer no to both of the uninsurable conditions, and also answer no to all the other significant health questions, and their medications cannot be considered high risk or modified, such as any medications pertaining to these questions in here that we're going to get to later, such as, for example, blood thinners or dementia medication, memory medication, such as that. Now, if you're not sure what medication would make them modified, call the underwriting number right here. Oh. We'll call that one and ask for underwriting. Okay. So, 20 pay. If a client qualifies for a final expense plan, and this final expense plan is a flat rate, they pay it for the rest of their life. They have full coverage from day one. We pay out full right away, and if it's within the first 2 years, there's contestability. Then if everything checks out, then we pay out after we do the investigation. So if they qualify for final expense, they also qualify for 20 pay. 20 pay means that they've also answered, where is it here? They've also answered no to all these health questions, and of course the uninsurable conditions, and their medications also check out okay. Alright, so that is a 20 pay. It's like a mortgage on a house. After 20 years, it's paid off. The client will not have to make any more payments on it anymore. Now, it is a little bit more expensive. We tend to use this more with clients that are 65 years and younger. It's very popular for kids. Now, we also have what's called a 3-year modified death benefit. This is for folks who are 0 to 49 years old. The maximum amount of insurance we can provide someone is $15,000, and if this is if they answer yes to one of the health questions over here. So the client will be modified if they must answer no to the uninsurable questions, but they would answer yes to one or more of the health questions here. This makes them modified, so you check off modified right there. And if they're between 0 to 49 and they pass away of natural causes, we're going to pay out all the money plus 10% of what they put into it. So if they paid in $1,000, we're going to pay out $1,100. If they pass away in the second year, we return all their money plus 20% of what they put into it. In the third year, we're going to return all their money to their beneficiary plus 30%. Thereafter, full benefit. Now, if they pass away of an accident, we're going to pay, say they have a $15,000 policy and they trip and fall down the steps and they have $40,000 of accidental coverage and they died of an accident, whether it's the first year or the 10th year, doesn't matter, and everything checks out to be okay, there was no foul play, or everything was done honestly, then we'll pay out the full benefit. Once again, the full benefit of the $15,000 because it was an accident, plus the full $40,000 on top, so $55,000, even if they are modified. Okay, would be the full benefit, and only if they die of natural cause will there be a limited benefit. Now, most of your clients won't fall into this category. They'll fall into this category here, a 2-year modified death benefit, which means that they're 50 to 85 years old, and it's the same concept. If they pass away of natural causes in the first year, they'll return all their money. We will turn all of the money to the beneficiary plus 10%. In the second year, we're going to return the premium plus 20%, and thereafter a full benefit. Okay, and that's the coverage amount is up to $15,000. All right. So, child rider is on page. We're on page 3 now. Okay, it's very simple. 1 unit of coverage costs $2. which gives them $5,000 of the child gets $5,000 of insurance coverage to the age of 25. It does not include the funeral planning. It does not include any accidental coverage. It's just strictly term, a level term policy to their 25 years old. And then when they turn 25, they no longer have it. It's just gone. So if the client gets 2 units of coverage for their kid, it's going to cost $4, which is $10,000. Okay, if they get 3 units, it'll cost $6 a month, which is $15,000 of coverage, which would also be 3 units. Okay, and we also have a rider is an attachment to the plan. So right here, you check off if the client gets it. On the application, you check off yes, and all kids have to have the same coverage. You can't have more insurance on one kid than the other. So it all has to be the same. This here is what the child rider application looks like, just so you can get a visual real quick. And please keep in mind that the child, not the child, but the parent, the owner of the policy, has to answer these questions, and they must be no. If the kid has a question that's marked off yes, then he may not be able to get insurance, or he may have to, or she may have to get a permanent policy, final expense plan. Okay. Accidental coverage. We have an excellent, this is on page 3 of the rate book, we have an excellent AD&D plan. This whole package here is 1 unit. So 1 unit gives them $5,000 for accidental death. That's if they trip and fall down the steps. $2,500 if they lose an arm or an eye or a leg. $10,000 due to an automobile accident, whether they're the driver or not, or they're just in the vehicle, whether it's their fault or not. $20,000 due to a common carrier, which is a plane, bus, train, taxi, automobile. A hack or a jitney does not count. Okay, this is a legitimate form of transportation that you do receive a receipt for. Death due to an act of war or terrorism. That's a hate crime committed because of your age, race, sexual orientation, or religion. An example would be 9/11 or Boston bombing. And if you're out of town, if the client's out of town and they pass away and they're more than 200 miles away from their legal residence, we will pay up to $1,000 in this example here to bring them back home. If they live in Philadelphia, let's say, and they want to be buried in the Bahamas and they pass away here in Philadelphia, we will not pay $1,000 to take them down there. It's only bringing them home. Okay. Now this whole package is considered 1 unit. On page 4 here, 1 unit, if you're between 0 and 70, all other plans would be final expense or modified. 20 paid plans are more expensive. You can see the PAC, which stands for pre-authorized checking, is $150, where the PAC is only $1 per month for all other plans. So if you're between 0 and 70, it's $1 per month. $1 gets you all of this. So of course you're going to add it into all of your plans. Now you'll notice if you pay $1 a month for 12 months, that's going to be 12 bucks. But if you pay annually, you get a little discount. It's cheaper. Same goes for the whole life insurance over here. All right. So we go up to 8 units of coverage, and please pay attention to the client's age, because the older they get, the more expensive it gets. Okay, so if they're 81 to 85 years old, it's going to be $18 a month in addition to their insurance, plus, in addition to the whole life coverage here. So let's say the client gets 5 units of coverage of AD&D. This will be $25,000, $12,500, $50,000, $100,000, $100,000, and $5,000. If they get 8 units of coverage, this will be $40,000, $20,000, $80,000, $160,000, $160,000, $8,000. You just multiply this number by the number of units that the client is getting of insurance. Okay, so the tobacco questions here, I'm going to go over in the next segment. So please stay tuned.